Moldova is taking decisive steps toward full integration with European capital markets, strengthening its financial stability and investment appeal. Ladies and gentlemen, esteemed colleagues and policymakers, it's an honor to stand before you today at Berlin Economic Forum and present Moldova's capital markets opportunities and integrations with European markets. As the CEO of Moldova Stock Exchange, I'm here to outline how Moldova is undergoing a significant financial transformation with ambitious plans to modernize its capital market, attract foreign investors, and integrate into European financial system. Before diving into financial opportunity, let me introduce Moldova's in number. Key facts about Moldova. Population, you have a population around 2.4 millions, flight connection with over 25 countries and 50 cities, language spoken Romanian, Russian, English, French, Ukrainian, and Turkish. Regarding EU membership progress, European candidate status, you give a candidate status since July 2022, and the European Union accession negotiations started on June 25, 2024, and targeted to full European Union membership is by 2030. Regarding international rankings, to understand Moldova's position in the global financial landscape, after more than 15 years out of a Fitch rating, is the most important rating agency on the world, Moldova got ranked in 2024 with a stable B+ outlook. This is very important. Beyond credit ratings, Moldova has also made impressive progress in other global ranking, like 5th place in the Gender Gap Index Economic 2024, 27th place in the Sustainable Development Report 2024. This ranking demonstrates that Moldova's resilience, innovation potential, and commitment to align with international economic standards. Now let's talk about Moldova's global market access. Despite its small population, Moldova provides access to the vast market to over 870 million consumers through its multiple free trade agreements, like Moldova Association Agreement, signed 2014, UK Moldova Strategic Partnership with UK by signed 2020, European Free Trade Associations signed 2020-2023, and others. How does Moldova attract retain foreign direct investment? Moldova foreign direct investment stock reached to 5.5 billion, with 84% of this investment direct investment foreign, is from Europe Union, from 27 countries from Europe Union. And the financial sectors remains the largest recipient of foreign direct investment with 35.2%. This showing resilience and sustained profitability. For major financial players, this is a clear sign that Moldova is a growing investment destination. Beyond foreign direct investments, Moldova offers a highly competitive tax system. For example, corporate tax 0% for small business and 12% for large corporate. Dividend tax, it's 6%, lower than Romanian 10 and Germany 15. Now let's analyze Moldova's capital market landscape. So, stock markets in Moldova. Moldova's capital market was established in the early 1990s following mass privatization and after the fall of Soviet Union. However, without a clear development strategy, it failed to mature into a key driver of economic growth. Now, with Moldova's EU candidate status, a new window of opportunity has opened. Unlike the European Union, Moldova's capital market remain highly dependent on the banking sectors, with over 90% of corporate financing coming from banks' loans. Additionally, Moldova lacks mutual funds and private pensions funds, while neighboring countries like Romania have developed pension system managing over 32 billion euro in assets. Addressing these gaps is critical to expanding investment opportunity, increasing financial resilience, and aligning Moldova with European market standards. So, why should major financial players to keep the eyes on Moldova? Our GDP was in 2023 16.5 billions US dollars and is projected to reach to 29.9 billions by the end of this decade, so marking a 75% increase. Other reason for major financial players to keep eyes on the Moldova is public debt level. So Moldova maintains a low public debt level in the region of 36% of GDP in 2023, significantly below 48 in Romania, 69 in Albania, and 51 in North Macedonia. According to International Monetary Fund's projections, Moldova's debt is expected to drop below 30% by the end of this decade. Also, the very important reason is our currency stability. So Moldova maintains a stable currency stability, with showing an average with annual fluctuation with just 7.7% over the past decade. It's a very, very low fluctuation considering that Moldova is an emerging country. And this currency stability enhances investors' confidence and support predictable financial planning. Also, Moldova benefits a strong support from from international institutions like European Union provides assistance for financial integration capital market. As well, European Bank from Reconstruction and Development Funds projects focused on digitization and financial system modernizations. Meanwhile, the World Bank and the International Monetary Funds play a key role in supporting economic and financial reforms. All this support over time has led to strong financial sectors. Moldova's bank maintained high liquidity levels, with the ratio for NPL non-performance loans dropping to a 5-year low of 6.1% in 2024. This is a very, very low ratio. Foreign investors hold 81% of equity in Moldovan banks, reflecting openness to international stakeholders. These factors ensure financial stability and solid foundation for further market development. One of the key aspects investors look is for security and predictability. So, you have bonds, and bonds provide exactly that. Let's take a closer look where Moldova stands in this equation. So, Moldova government bonds offer attractive yields for over past years. You have an average for 10, so average on yields for 10 years is 9.7% for 2 years bonds, 8.3% for 3 years bonds, and 7.1% for 5 years bonds. This is average yields for average 10 years yields. If you look back in 1980s and 90s, European countries like Germany, Italy, and France, bonds with average 10% and annual yields market a golden era for the financial market. In addition to long government bonds, Moldova also offers highly attractive short-term investment opportunities through treasury bills. You have bills for 3 months, 6 months, and for 12 months. Over the past 10 years, the average yield has been 8.7% for 3 months bills, 9.7% for 6 month bills, and 9.8% for 12 months. These short-term instruments provide high liquidity, competitive returns, and secure way for investors to optimize their portfolio, and considering the stability of our currency with fluctuation just 7.7% on the year. Beyond government bonds and treasury bills, Moldova's capital market is evolving with new opportunities in municipal and corporate bonds. For the first time in Moldova, municipal bonds were issued in 2022, and these bonds was quickly sold, offering yields around between 7 and 9% per year. And in 2023, also, as well, for the first time, Moldova launched its first corporate bonds, making a significant step towards financial market diversification. These bonds were as well fully subscribed, reflecting high demand from institutional investment with annual yield around 7%. However, in the European Union, over 30% of corporate financials come from the corporate bonds, and in Moldova this figure is below 1%. Now that you have a covered bonds, let's move on. Another key of our part of financial growth is investment funds and private pensions. Moldova presents a first mover advantage for investors looking to enter in an untapped financial market with a high growth potentials. Currently, there are no mutual or alternative investment funds, and Moldova regularly adopts European Union investment fund directives initiated by Q3 2024, and this will complete by Q4 2026. So you are close. For investors, this presents a unique opportunity with zero competition, new market, yearly entrants will dominate these sectors, setting market standards, first mover will shape regulation and operation practices, securing a strategic advantage in market development. Also, in Moldova lacks private pensions funds. Unlike Romania, where the private pension sector is quite developed. The goal will be to implement the successful private pensions model like in Romania. Romania's experience demonstrated that implementing private pensions funds can generate real benefits for all, for businesses, for citizens, for population. In Romania, they have mandatory private pensions Pillar 2 and voluntary pensions Pillar 3 have become the beacon of Romania's pensions systems. In 2024, private pensions fund assets in Romania surpassed 32 billion euro, with 9 million contributors actively participating. This is amazing, and while Moldova has none. It would also benefit for the full adoption of European EU legislation in these sectors by 2026. Investor who enters in Moldova's investment and pensions fund market now will gain the first mover advantage in the high potential sectors. Investment funds and private pensions are important for financial growth, but reach their full potentials, Moldova needs stronger connections with the bigger market. That's why integrating with European capital market is so important. Moldova is taking decisive steps toward full integration with European capital markets, strengthening its financial stability and investment appeal. On January 2 this year, Moldova adopted the euro as its reference currency, aligned with over 16% of Moldova's external trade is dominated in euro, and 70% of remittance from Moldova diaspora send in euro, reinforcing the country's financial connection to Europe. These transitions enhances currency stability, reducing exchange rate risk for investors and businesses, increases confidence for European investors, and making Moldova's capital markets more accessible. Additionally, the European Union has launched an unprecedented support package for 1.8 billion growth plan from Moldova, designed to accelerate our country's economic and financial alignment with the European Union. The European Union billions 1.8 billion euro growth plan will accelerate Moldova's integration through financial assistance, so direct fund to support Moldova's economic expansions, regulatory reforms meeting European Union financial standards, EU market integrations. Moldova gains access to a well-developed financial ecosystems, and stronger investor protection backed by European Union transparency and security regulations. Full integration in the European Union's financial ecosystem will position Moldova as an active participant in the European capital markets. As we conclude, it's evident that Moldova is a pivotal moment in its financial evolutions. The strategic reforms we have outlined, including capital markets modernizations, investment funds creations, and European Union regulatory alignment, are key to our deeper integration into European markets. The Moldova Stock Exchange has the potential to become a bridge between Moldova and European capital markets, attracting investment and driving economic growth. Now it's time to act. Let's work together to unlock Moldova's full financial potentials and build a thriving, competitive and integrated economy. Thank you all for your attention.